Yo guys, welcome back to Stock Talk Insider. Today we will be talking about our most beloved stock on the portfolio. And for today, that is actually SoFi. That's always been SoFi for a long period for now. So yeah, we'll talk about SoFi, what happened this week, why it rallied so much in only this week alone. And yeah, why the stock is breaking out, to be specific. So we'll look at the stock price, we'll look at some investor confidence returns along base and then the breakout sort of story, and a little bit about its explosive revenue growth, which was a very big catalyst for this breakout, together with the, a couple of news facts about the rate cuts. So, of course, SoFi, as you see, is the biggest position for me by... Well, not by far, but by a nice margin at this point. And that's because of the growth it had this last week. In total, we do have a bigger position in invested capital with AMD, because we only have like almost 3k in profit, but it is a position of 22,500 euros. And here we have 25,125 euros, which already has an unrealized gain of 11,100 euros. So, saying and having said that, we know that SoFi is the biggest position in my portfolio. So it is the one that I keep watching the most, and I believe in the most, of course. But still, you can also say that of AMD, because I actually invested more into AMD than I did in SoFi. But SoFi was a company that I invested in a long time ago, so I had really the lower prices that I could buy that. So I bought it at around $6, $7, $8. Then I waited for a minute, then it went up to like the 15s, and then it went down to like 14s and the 13s and the 12s. And there I bought a little bit more, and now we are at $1,000 shares in SoFi. Will I buy more SoFi before I really start with all of the things I want to talk about? At this point, no. I keep the shares that I have right now. I'm very, very pleased with the size of the portfolio and the size of this position. If the size of this position goes in a couple of years to where I think it will go, then we will already have very nice, big, and very good returns, in my opinion. So I'm not going too much more into this position, unless there is a very, very big dip. If we really have a big whole market dip, it has nothing to do with the specific performance of the company, then I will buy more. So if you have like 40% corrections on single stocks, and then I mean around 10 to 15% correction on the S&P, then I will buy more SoFi, because in the long term, I do believe that SoFi can be like $80, $90, $200, but then I'm talking really about a couple of years, of course. My price position still stays at $35. That's around $5 more. If you look at the stock price in dollar, that's around $5.5 more. I do believe that we will hit that in June 2026, but of course we can also hit that sooner. But I do believe that with some things like a little pullback or a correction or some better news or something like that, we can probably go a little bit lower again. But of course, maybe this can be very conservative, but I like to be conservative, because then you normally don't get to be upset that much, because you don't expect too much of it. If you always expect too much, then you're always gonna under deliver in your wants and needs. So having said that, $29.51 is the stock price of SoFi for today. So going towards what I want to talk about is that SoFi Technologies has been a name that sparked both excitement and skepticism. A digital first financial platform with ambitions to disrupt traditional banking, SoFi promised rapid growth, but its stock traded at low levels for a long stretch. Now things have changed, the stock is breaking out and the reasons are clear: renewed investors' confidence and long technical base, supportive macroeconomic conditions, and most importantly, explosive revenue growth. My reason one is that investors' confidence is returning to SoFi and it is even expanding way more than it was ever. So the first driver is confidence. Early on, SoFi seen as a high potential fintech, but many questioned whether it could deliver sustainable results, which it is doing right now, but we'll get into that in a minute. So over time, management has proven it can execute, improving margins, expanding its ecosystem, and steadily growing revenue. That consistent execution is finally restoring trust from investors. And having said that, we'll go to reason 2, which is a long base, and then we had a breakout. So from a technical perspective, if we look at, this is the 1 year chart, but if we look at all, then I take it from here to here. That's around almost 3 years. 1, 2, 3, well, almost 4 years actually. But yeah, we'll take it on 3 years. So from a technical perspective, SoFi has spent an extended period consolidating at low level. Stocks that build long bases often store up energy. When momentum finally shifts, the move can be sharp and powerful. That's exactly what we're witnessing with SoFi's recent surge. If you look at this one, this is literally just a spear. This is literally just a spear up. So the macro tailwinds and rate cuts is that the Federal Reserve recent did their rate cuts and are another major catalyst, of course. So that's also one big thing why we got this big one. Both central to SoFi's business. As lending activity grows, SoFi is perfectly positioned to benefit from the rate cuts, of course. So yeah, that's a very big catalyst for SoFi because now they can give cheaper loans and all of those things. And people will use more of the products from SoFi because, well, the rate cuts are down. Reason 4 is that we have some explosive revenue growth, of course. That's one to be looked at. That's one to look at the most. So the most powerful factor is still the growth, of course, of the company. So last year, SoFi posted 20% year-over-year revenue growth, which was already very good. But this year, that figure has jumped year-over-year. So last year, year-over-year revenue growth was 20%. But this year, we literally went up year-over-year to 44%. That's 24% more than it was year-over-year last year. That's mental, you know. So people can't say that this is not a good company to buy at the levels it was. And people can't say that this isn't something you can overlook. So the 44% year-over-year revenue growth isn't something you just skip. You literally look into the company as much as you can if you see significant gains like that. That is not incremental improvement, that is exceptional expansion. It shows that SoFi is scaling across lending, technology, and financial services far faster than most expected. For investors, this matters because once a company enters a high growth trend like this, stocks often reprice dramatically higher as fundamentals gain recognition. So the bigger picture, what is it actually? Well, SoFi is more than just another fintech startup. With its broad product offering, accelerating revenue, and strong brand loyalty among younger generations, it is positioning itself as a serious challenger to traditional banks, as in the macro tailwinds of lower interest rates, and the story becomes even stronger. Conclusion is that SoFi is a stock surging for good reason. After years at depressed levels, investors' confidence is returning, the macro environment is improving, and revenue growth has exploded from 20% year-over-year to 40% year-over-year. This combination, trust, breakout, momentum, and powerful fundamentals, is what can take a stock much higher. SoFi is proving that once confidence and growth align, the upside potential can be enormous. And well, that's actually a little bit of what happened with Robinhood and Palantir, in my opinion, and a lot of more stocks probably also. Times of today, there is just so much information you can get in like 1 minute of your time. and people can make decisions that faster than they could 20 years ago, 30 years ago. So, well, upsides like this become more and more normal, in my honest opinion. Of course, it's more of a reason also when we have a big swan event on the whole market that this can also reverse just as fast as it went up, of course. But still, you can go higher up faster than you did in the previous decades, because there's just so much as information, as I said before, that you can get your hands on in like just under a minute. So you can make decisions more faster, and yeah, it's so much easier to invest, and it's so much more, well, chance opening for other people too. So having said all of that, I believe that SoFi is still a buy if you look in 5, 6, 7 years of time. And also one thing is that everyone who has bought SoFi actually didn't lose money. Nobody that has bought the stock right now did lose money, unless you sold on a bad call. So thanks for watching, and I'll see you guys later. Do leave a like if you want, and then we'll see you guys later. Bye bye.